Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 25th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. A super narrow range right now, with about a minute to go here until pre-market economic data comes out. We have GDP coming out, durable goods orders, initial jobless claims, new home sales. A lot of things coming out here today, but right now, about a minute away from that. Overall, this market here continues to remain quite bullish. You have a rising 8-period average right now. We are perhaps at a cycle high within this uptrending market right now, which means we could withstand a bit of a pullback here before perhaps trying to bounce and continue higher yet again. This market remains quite strong. Now, the previous session, we did have 3 hours of selling pressure that turned prices off the highs of the day back down toward the lows. That's about as much selling pressure as we've seen over the last week, really since this part of the week right here, which was a Monday through Wednesday here, or Tuesday, Wednesday, and then Thursday, Friday, big time rally. And then you see what happened here already so far this week as we continue to push to new highs. So really the most selling pressure we've seen, but really not the strongest high from a rejection standpoint, but enough perhaps to lead to a bit of a rotation into the 4840, 4850 zone. So now that we have the numbers coming out here, initial jobless claims, GDP coming out, GDP at 3.3 versus a 2.0 estimate, initial jobless claims coming in at 214K versus 200K, and so now you're going to start to see this thing ripple a bit. For the most part here, again, narrow range here for today. If there is any rejection of prices below the previous session's low, that could open up a continuation to the upside here through the previous session's mid and higher. A further selling pressure again into about 4840, 4850 could provide a bounce opportunity should that zone be tested. But as of right now, keep an eye on the previous session's low. Any rejection here could start to drive prices higher as this thing remains quite bullish. Taking a look here at the NQ. Very similar price action for the NQ in the prior session. Selling pressure off the highs of the day back down. Still not a very strong high to suggest more weakness ahead, but even if we did pull back, super bullish rising 8-period, a rising PIMA trigger zone, and continues to hold above the 17,200 breakout point. And any retest of that breakout point could lead to a continuation higher until proven otherwise. Again, if we do fail to see a bounce at this level, that could open up further weakness. So there's quite a bit of distance here, quite a bit of saving grace here for bulls, even if there were to be a pullback. Again, similar to the ES, not the strongest rejection here on these highs, so any pullback could still be bought as this thing continues to chew higher ahead. Now, taking a look at crude oil, this one's up right now 1.2%. We have the 76 level, that's very, very important and being tested as of right now. We mentioned before that this market is very close to seeing a full-on upside expansion that could take this market into 80 and beyond, perhaps as high as 91.5. 91.5 would be the 100% target of this impulse move right here. So you have that impulse sell-off down, bounce to the mid, building some energy. The 100% target points right there, 91.5. up ahead. So that would be the longer term target that could be reached by the first week of March. As of right now, this market has had a tough time pushing through 76s. It finally closed above that 55-period PIMA yesterday and is continuing to grind higher at the moment. Any pullback, any failed new low could be a buying opportunity as this thing starts to rev its engines for more upside. Keep an eye on 76. Any rejection of that level could push prices back into the range. But again, bulls looking to defend pullbacks for an eventual upside break and continuation. Looking at gold, gold marginally higher at the moment. This thing dropped early. A bit of a strong drop right now on the release of the economic data right now. You can see a big strong low right here. That was a flash low and a strong reversal off that low. That low comes in at 2004. Again, to begin the week and end last week, we were looking for any pullback this week to be sold for a push into 2000 and as deep as 1990 here. just missing out on 2000 right now, hitting 2004 and bouncing. This market continues to hold within the boundaries of the large impulse move here. Again, that strong high down to this strong low, bounce back to the mid. That's now your key range and your boundaries. So eventually at some point here you would expect a test down into the 1986 edge. Overall, this market still kind of holding at these highs. A very clear short-term downtrend here, but not really a downtrend that would suggest a full-on break and failure here. Even if we were to test the edge, we could bounce right back up and make a move here to the upside. Right now, showing a bit of a strong low, trying to find the opposite high at the moment. Still trending down with the potential to hit 2000 and 1990 as the week continues onward. Looking at the YM, right now, a range of about 179 points at the moment. That's 51% of average. You can see right here, this thing has been super sideways. While the ES and NQ pushed to new highs yesterday and found a bit of a rejection off of the highs, intraday at least, this one stayed nice and tidy within a 3-day narrow range. Today, you see a test at the edge right now, and you have a 4-day developing narrow range here with an upward bias. You can see right here, 8-period average providing a bit of intraday support. We could see price move back up within the range here, but this 4-day narrow range building some energy. We have the potential for 800 to 1,000 points on a breakout move. And again, if this thing is going to break to the upside here, it opens up some clear air above. The problem here has been that this market really hasn't wanted to budge from the previous year's close. The previous year's close, that blue dotted line right here, and it's hugged the flat line throughout the year, testing it each of the last 3 days. You can see again we have a modest expanding range here. An expanding range can tend to continue to develop until we're ready to really see that expansion. As of right now, the failed new low opens up a move back up, but really we're still in the 4-day narrow range developing. A failure at 37.8 could open up a test down at these lows, but even if we drop, again, kind of like the ES and the NQ, it could be an opportunity to buy it right back up. So this market remains quite bullish, but continues to create a very narrow range here. Eventually, a breakout from this narrow range could trigger the next 800 to 1,000 point move. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.